And there you have it, another closing bell at New York Stock Exchange. It was another down day for the Dow, closing the afternoon in the red, more than 300 points. The S&P 500 and the tech-heavy NASDAQ saw losses as well. Both closed down roughly 1.25%. Let's bring in George Ratiu, who has more information for us. He is an expert on these markets, so you're going to help us figure this out because it's been a tough year, as everybody knows, especially if you're looking at your 401k. But what do you think is driving the market down today?
So, Jeff, we're seeing a lot of developments in markets really based on expectations. Specifically, markets have looked at the Fed this year because the Fed has driven so much of what's happened in the financial markets, right? Monetary tightening was extremely aggressive. It was a Fed that was, in a sense, left behind the 8 ball at the beginning of the year. Then it saw inflation move at a pace not seen in 40 years. And so the Fed's been aggressive. It, at the same time, started signaling that it's beginning to see movement in inflation. Both the PCE and the CPI indices have shown moderation in the last few months. But at the same time, it said it's not ready to let go of the gas pedal. And so that has had tangible reverberations throughout the economy, specifically the housing market. We've seen mortgage rates shoot up, over 300 basis points in the span of roughly 10 months. That has really chilled the market. Buyers have hit a financial ceiling. They were not really able to carry on with transactions in the face of that. And so as we move to the tail end, and we're about to wrap the year, there are still some slivers of really good news. GDP for third quarter was revised twice upwards. We still have 10 million open jobs and only 6 million unemployed people looking for jobs. Consumer confidence is at an 8-month high. So the big question, I think, for markets is, where is the economy going forward from here? What's going to happen to housing markets? And I think that uncertainty is showing up in volatility.
All right, but come on, can't these investors focus on the positive? You talk about the silver lining there, but yet they seem so pessimistic as we head toward 2023.
I think for markets, to your point, Jeff, there's a big disconnect between expectations and performance. Right now, the markets are assuming that the Fed will be somewhat successful in taming inflation. At the same time, I don't think markets are convinced the Fed will achieve its soft landing. Right? Markets have really been concerned about the economic recession. In fact, at the mid-year we saw this debate when we saw 2 negative quarters of GDP. There was real debate over the fact, are we in a recession yet? When you look at employment, incomes, business investments, we were still positive, especially in the second half of the year. So I think investors are not fully buying the Fed's argument about a soft landing, despite the evidence so far.
All right, so what do you think is going to happen tomorrow as we get closer to the new year? Do you think at some point this week the stocks will head into positive territory for the day?
I expect the stocks to actually retain volatility into the new year, in part because earnings seasons were mixed for a lot of companies. We've seen a lot of turmoil in the tech sector. We've seen layoffs. In fact, that was the one sector that got hit by pretty, headline-inducing layoffs. The rest of the economy is still faring well. But with those uncertainties, throw in the geopolitical situation in Ukraine, throw in the what's happening in Asia, and particularly China, with the zero COVID policy ending. There's a lot of mixed signals and uncertainty. So I don't expect that volatility to necessarily end anytime soon.
Yeah, and you kind of talked about this at the top of this interview, but let's revisit, because home sales are, the real estate market, of course, important for a lot of potential home buyers out there, but there is volatility in the home sales market as well. We're seeing statistics that it fell 4% in November. Do you think those numbers are going to turn positive at any point in terms of home sales, or are we just going to have to wait for the next, 10 to 12 months, but really the long term before things turn around?
So, Jeff, I see here that at least the current market, as you pointed out, whether it's existing home sales, contract signings, right, pending home sales, absolutely indicate a market that's frozen into the depths of winter. Buyers are by and large tapped out by the current high rates and high prices. And at the same time, homeowners have pulled back from the market really strongly, even accounting for the seasonal pullback you see normally in the cold months. And so if anything, right now, the homes that are on the market are staying there longer. We're seeing the share of homes with price cuts really rise. We've hit 20% of listings on Realtor.com are having price cuts, at a rate we haven't seen since 2017. All that tells me is it's basically a stalemate between buyers who can't afford and sellers who in many cases have a mortgage at 2.5, 2.8% and don't want to trade that mortgage for a 6+% mortgage plus higher prices. So likely we'll have to wait until spring to see what the rest of 2023 is going to show in terms of transactions.
Yeah, those lower interest rates, the 3-point-something percentage rate for a 30-year loan, those were the good old days. We're not seeing that too much anymore. George Ratiu, thanks for your time.
Glad to be here with you.